What if I told you that the biggest debtor on earth is plotting a magic trick, a $35 trillion vanishing act, because a senior Kremlin insider just accused the US of secretly scheming to wipe out the US's national debt using stablecoins, crypto, and gold? Yes, the United States allegedly wants to drive its debt into the cryptocurrency cloud, devalue it, and start from scratch, which is like the financial equivalent of burning evidence at a global scale. Now, this comes straight from Russia's Eastern Economic Forum, but in a world where Jamie Dimon is seeing cockroaches crawling out of the financial system and regional banks are imploding left, right, and center, even the craziest ideas start feeling oddly plausible. So in this video, I'm going to explain exactly what is going on, what Russia has actually accused the US of doing, and whether or not there's any truth or you should worry about this claim. So what exactly happened? Well, in early September, Russia's Eastern Economic Forum, a top advisor to Putin, dropped an allegation against the US. He's called Anton Kobiakov. Hopefully I'm saying that correctly. He's one of Putin's senior strategists, and he claimed that the US is orchestrating a plan to offload its $35 trillion of national debt by rewriting the rules of gold and cryptocurrency markets. And in other words, that basically means that the US would shift a huge chunk of its debt into stablecoins and other digital or tokenized assets, and then devalue that debt and essentially wipe the slate clean. Now, he warned this would be a reset done at the world's expense, meaning that you and me and everyone else is going to pay for it and not the US government. Okay, so he's claiming that the US is going to rewrite the rules. What exactly does that mean? Well, look, he didn't come with a step-by-step manual, of course, but he did paint a little bit of a picture of the US gaming the system, manipulating crypto and gold prices, and then pushing debt into a digital form where it could be diluted or erased quietly. And he basically said that the US wants to treat Bitcoin and stablecoins and gold as new age debt mechanisms for money printing and debasement by another term to get around the, unpopularity of inflation and taxes. Now, the idea here is to convert trillions of dollars of American debt into a digital token or a gold-backed coin, and then change the value of that token or the gold price of that coin so the debt effectively shrinks in real terms. And then all of a sudden, the debt problem is pretty much solved. It's basically an accusation that the US has spent a century building up the US dollar into the financial behemoth it is today, so that the US can then raise trillions in debt to benefit their economy, and then spend all of that influence in one go by wiping the debt away as we move to digital currencies and away from the fiat currencies which have dominated the last 100 years. Russia's saying that the US is willing to torch the dollar's integrity and to destroy global creditors just to save out on having to pay off their debts. And Kobiakov even phrased it as the US starting from scratch financially, almost like declaring bankruptcy whilst keeping all of your assets intact so you get all of the gains with none of the problems. Okay, so that's the accusation here, but let's be a little bit pragmatic. Why is Russia saying this? Why would they want to protect the Western financial system by exposing a plan like this if it is true? And is this just a Russian attempt at de-dollarization and that propaganda in an attempt to weaken our confidence in the US dollar to help BRICS nations like Russia and China and India win? But first, let's clear this up here. Russia isn't protecting itself from some kind of American reset here because they've never been huge on being intertwined or influenced with that Western financial system in general, which is held up by the US dollar and by US debt. And that's even more so the case in the wake of the Russian invasion of Ukraine and the huge, monstrous financial sanctions that were levied against Russia. They hold now almost no US debt these days. So this isn't about Moscow worrying that it won't get paid interest for its American debt. This is geopolitics, right? Russia is really trying to speed up de-dollarization, convincing other people around the world that the US currency is basically this ticking time bomb that can't be trusted and that the US is going to just screw everyone over. Now, one of Putin's ideologues and a Russian economist has preached for years about the US abusing its financial power, and Kobyakov's reset crypto claim fits that narrative perfectly. It's basically a PR assault aimed at sowing doubt, saying that America will cheat you, so you better leave the dollar whilst you still can. And that being said, the accusation's timing is telling, right? Global trust in the US dollar and financial system has already been shaken by things like the repeated raising of the debt ceiling and the crises that come around that, and the government shutdowns that we're even seeing right now, and then money printing or quantitative easing sprees that we've seen over recent years as well. The free money scandal of interest rates just being close to zero for well over a decade, And Russia is capitalizing on that alongside the growth and the hype around traditional and non-traditional stores of value like cryptocurrency, like Bitcoin and like gold. Essentially, they're painting the United States as frantic in its push towards cryptocurrency in particular as an attempt to find a backdoor escape from its debt problem because the world is finally starting to lose a little bit of faith in the US dollar. Now, could this be true? Could it be, a plan that's actually in action, and could it actually work? Well, sadly, yes, it is actually possible that this is the case, and if it's a policy that the US properly pursued, it could end up being successful to wipe out or massively reduce the size and the burden of the US national debt in all but name, and then screw over all the bondholders around the world. How might that actually work? Well, one theory is that the US Treasury or the Federal Reserve could issue basically a new digital coin and call it something like just debt coin that's somehow backed up by US bonds. Maybe each token of that coin is backed up by $1 in a US Treasury bond at first, so it's sort of like a stable coin that yields an interest. Then after the debt coin has been around for a while and it's gained some traction and some trust from the users and the financial system, then they start to swap out a chunk of the country's traditional treasuries for this token, which is still essentially the same thing as it's supposedly backed 1-to-1. And then through a policy or through sleight of hand, they slowly start the process of devaluing that token, maybe by flooding the market with more of it or just outright altering its peg, or maybe allowing different bonds like lower grade corporate bonds to be used in collateral instead of the much safer US treasuries. In effect, they pay off $1 worth of debt with, say, 50 cents worth of debt coin, and the US national debt just got twice as easy to pay off. Now, another way this could work is they could use the Fed's balance sheet to buy up Bitcoin or gold at high prices, or another form of store of value, something which they claim that is a store of value and nothing else, and then later they just change the value of those assets and they revalue them upwards dramatically. We're not really talking about a corporation here, so if they want to set a value of gold at $8,000 per ounce, there's nothing really stopping them from doing that. And in reaction to a revaluation of a large, widely traded asset like Bitcoin or gold, the dollar price of gold or Bitcoin would soar, but in reality, the asset hasn't become more valuable. The commodity isn't more valuable, it's just that the value of the dollar itself would weaken and US debts in their new devalued dollars would become cheaper to pay off. It's basically inflating away the national debt in a new fancy way that the average person doesn't really understand and wouldn't necessarily vote against. But really quickly, I just want to talk to you about a company called Oncolytics Biotech Inc, which trades on the NASDAQ under the ticker symbol ONCY, and that I actually spoke about back in September as well. Now, Oncolytics Biotech is a clinical stage biotechnology company developing PaleoRep, an innovative cancer therapy delivered by IV drip. This drug PaleoRep works in two key ways. Firstly, by killing directly cancer cells, it selectively replicates inside tumor cells, causing them to break apart and release signals that alert the immune system whilst normal cells are left unaffected. And then it also works by activating the immune system. It turns cold tumors, those which are ignored by the immune system, into hot tumors, sparking both an immediate immune attacks and long-term immune memory to help prevent relapse. The therapy has shown encouraging results in pancreatic, breast, and other gastrointestinal cancers, and has received fast-track designation from the US's FDA in both pancreatic and breast cancer. Oncolytics Biotech have recently brought on a new CEO, Jared Kelly, and Chief Business Officer, Andrew Armando, to optimize PaleoRep's development path. Both are experienced biotech executives with decades of experience advising companies, advancing clinical programs, and navigating successful transactions, and they were both instrumental in guiding the $2 billion sale of Ambrx Biopharma to Johnson & Johnson. The company has serious potential upside. Their market cap is currently only around $115 million, but if PaleoRep is able to make it through regulatory scrutiny, the company's value could skyrocket. The stock has already risen in value by about 100% over the last 6 months as Oncolytics Biotech Inc. continually released promising results from their clinical trials, and just last month they announced a brand new trial aiming to establish PaleoRep as a pioneering immunotherapy in pancreatic cancer. I'll put some links down below in the description for you to read more about Oncolytics Biotech, but of course, always do your own due diligence. Definitely give this company a deeper look because I certainly know I will be. Now back to the video, and okay, that's what could happen, and that's why it might happen, and even what Russia's motivations for accusing the US of all of this grand scheme could all be about, but is there any evidence or precedent to this being the case? Is there any evidence to the US actually seeking some kind of massive dollar reset that allows them to just delete trillions of dollars of debt? Well, sadly, actually, yes. There are a few things here that are actually very worrying in this sense and could be a precursor to what might happen next. Now, just a couple of months ago, and before Russia made its accusation, the US formally adopted stablecoins into its regulatory framework. In July 2025, Trump signed the Genius Act, a law that finally puts regulations and legitimacy on US dollar-backed stablecoins, which are basically just cryptocurrencies pegged to the value of $1. Now, this wasn't done quietly. It was shouted from the rooftops, as it shows the US is taking the crypto world seriously, and so it's been widely spoken about as a win for the crypto industry in the US. Congress passed the act with a big bipartisan majority as well, and the law basically says if you want to issue a US dollar stablecoin like Tether or USDC, if you're interested and involved in the space, you have to play it by these very strict rules. Every token has to be fully backed by safe assets like US treasuries or actual physical cash, not just junk bonds from dodgy corporations or private credit notes lent out with no oversight, and the issuers of these stablecoins are going to be very tightly supervised. So the US essentially just legitimized cryptocurrency dollars. Why? Well, possibly because lawmakers realized that these digital dollars could be a strategic asset. One Federal Reserve analysis noted that a proper US stablecoin framework could boost demand for treasuries. Stablecoin issuers would buy more treasury bills to back their coins, as they're pretty much the only income yielding asset they're allowed to hold, and that would create more demand for US debt, which is good news for a $35 trillion debt pile that keeps on getting bigger. And it's not just the US government getting involved either. Banks and Wall Street are taking a look at all of this as well. Bank of America, that very traditional bastion of old-style finance, has themselves been building a digital cryptocurrency pegged to the value of the dollar in an attempt to get in on the crypto boom and make some money. And they're also not alone, with even JP Morgan launching their JPM coin a few years back to move money around internally. Now the DTCC, which basically clears stocks and bonds on Wall Street, they built a platform called Project Ion that's already using blockchain to settle trades in near instant time with great accuracy and security, using that staple of cryptocurrency that, blockchain technology, and pretty much all of them are built upon. Now, they even ran simulations in 2024 using tokenized US treasuries as collateral for trade to see if it would work in theory, effectively trading digital representations or a debt coin of treasury bonds instead of the bonds themselves to see if it would work. What this all means basically is that Wall Street have started this process of digitalization or cryptoalization or tokenization of the dollar already. They're experimenting, seeing what is working and what isn't, and where they can make a buck. Most importantly of all of this, though, is the Federal Reserve, which is now exploring a full-blown digital currency altogether. Over 2023 and 24, the Fed's Boston and New York arms ran experiments like Project Cedar to test cross-border payments using a simulated digital dollar on a distributed ledger. The New York Fed even published papers on tokenization and financial stability, acknowledging that if tokenized assets grew large enough, they could transmit shocks between crypto and traditional markets and might actually pose a serious threat to the financial system as we sit. Now, the central bank digital currencies are another area of this, and it's a really important part of all of this research as well. The Fed has an open comment file on a US CBDC, and the Treasury is studying its implications, trying to work out if it might help them. And obviously, it's not just the US looking into CBDCs either. 86% of central banks globally right now are researching CBDCs, and 14% already have pilot projects in the works. Even Jerome Powell himself said essentially that if the dollar's status is threatened by new technology, the US will adapt to keep its currency dominant. And in my opinion, it is obvious that currency is going to get more digital and more tokenized in the future, all but making and ensuring the Fed's pursuit of a CBDC or Fed coin or whatever else it might be called might be a near certainty over a long enough time horizon. Now, what is the argument for this tokenization that's coming from the banks and the government? Well, in short, it's just market efficiency and security. They are very clear and adamant that it is not about cheating creditors. They say this could be an easy way to improve the financial system, to make trading 24/7, to eliminate settlement delays and mistakes, and to even free up trillions of dollars that's currently trapped up in liquidity. If this actually did happen though, what's the economic backlash that we're likely to see, and who's going to get hurt if the US pulls off this global debt reset? Well, the first victims of a crypto debt reset would be the holders of US debt themselves, and anyone and everyone who owns a treasury bill is going to lose money from this. In terms of the biggest losers, we need to be thinking of the countries or institutions which own billions or trillions of dollars of this debt, like Japan and China, and then the institutions which, like a slow but steady safe investment, like pension funds and insurance companies and the like. If the US suddenly changed everything and they had the whole system set up and then simply changed the peg of a tokenized US treasury coin, well, those creditors, those people who lent to the US government and own that debt, they would see the real value of their holdings plummet overnight. Most likely, confidence in just US debt across the board would collapse as well, and the US would seriously struggle to raise any debt from those creditors in the future. And we need to remember that in finance, there is nothing as safe and secure as US government debt. It is often literally called risk-free in finance, so a change like this would be monumental and completely unexpected if it happened overnight. Next, we would see a massive impact to the US dollar's status as the world's reserve currency, as the petrodollar, or even just a normal stable currency at all. If the US shows that it's willing to sacrifice the US dollar to solve its debt burden problems, why would any other person or company or institution or country hold dollars as reserves? They would be willingly exposing themselves to huge risk with very little upside, and you would almost certainly see a very quick switch by investors and entities to alternatives. And in particular, in my opinion, the two biggest winners would be gold and Bitcoin, both relatively mainstream in the attention they get, both understood mostly by the general population, but in particular, both impossible to debase or simply print more of. Central banks have actually been buying gold at record pace recently as they look around at the debt burden faced by supposedly safe and secure governments like the US, and they aren't really sure how that debt burden is ever going to be paid off or solved, so gold seems like the safer option here. We'd likely see more adoption of other currencies around the world as well, like the euro, the yen, the pound, or the won, or maybe even some brand new BRICS combined currency if they're able to back it up against the value of natural resources as they've hinted they want to do in the past. The problem is, though, this act of mass debasement of US government debt would validate every single argument against holding US dollars or US debt all at once. And China and Russia and India and Saudi Arabia and every single country around the world that doesn't want to be forced into the US's sphere of influence and tacitly controlled by them, they're instantly proven correct, and they'll make every attempt possible to protect themselves from reliance on the US dollar forever into the future. The dollar wouldn't literally implode or explode to zero, and it probably wouldn't see full-on hyperinflation either, not into the thousands or millions of percent, but it would see very, very high inflation that the US consumer has never seen before in their lifetimes, something that's only really going to be commonplace in a country like Argentina, where 50% or 100% inflation isn't actually that rare. And that would cause the US dollar to halve in value every single year because of this debasement. The US economy is still huge and dominant, right? The best companies in the world, huge natural resources, even just the sheer size and talent of the labor pool would be enough to ensure that the US is still the largest single most important economy, but it would lose the allure it currently has of just plain flat out stability that can't really be matched anywhere else. And of course, the US dollar would certainly instantly lose its global reserve currency status. As for the impacts to Wall Street or the world of finance, well, we would have a huge crisis. Obviously, every single financial institution, not even just in the US, but in the world, is ridiculously exposed to US treasuries because, again, it's seen as literally risk-free. That debt is used as collateral for loans and deposits and assets and literally everything else. We would see a global financial crisis, way worse than the one we saw in 2008, way worse than what we saw with those regional banks going bankrupt in 2023. The only real comparison here would be almost 100 years ago back to the Great Depression. In particular, though, the most obvious thing people would notice, other than the huge levels of inflation, would be the massive increases in interest rates as well. as the assets that are supposed to be collateral for loans given out, they have suddenly themselves gotten 10 times more risky, so giving out loans carries far more risk for the lender as well. That surge in interest rates would cause a massive market crash, and for good reason, right? Every advanced economy in the world is really based on cheap debt, and that cheap debt would just disappear overnight. Companies' borrowing costs would jump instantly, profits would plunge, and investors would find their assets worth a mere fraction of what they used to be worth, and that's even ignoring the companies that would just go bankrupt and lay off all their staff if the interest on their debt spiked too much. Let's not forget that a company like First Brands, with its very public and recent collapse, actually fell apart because they had to restructure their debt and they weren't able to afford that. Now imagine how bad that situation would be if interest rates went up by 1,000% overnight, and even well collateralized companies with only a little bit of debt would find themselves in serious trouble. The pain, though, obviously wouldn't just stay in the financial markets, it would hit everyday people very quickly. For one, any move to devalue debt via inflation or currency shenanigans means that inflation is going to go up. The cost of everything, food, fuel, rent, would surge as the dollar's value starts to shrink, and as always with inflation, the wealthier you are, the less of an impact that has on you. The more normal you are, the bigger an impact. So the next massive problem would be that double or triple digit inflation would lead to interest rates just as high, so borrowing costs for consumers and businesses would skyrocket. Mortgage rates, credit cards, HELOCs or business loans would all be almost impossible to get. If you can get them, they would be incredibly expensive, and this would basically be a full-on credit freeze. The housing market would find itself in nominal terms skyrocketing in value, as inflation would impact home prices directly, but in real terms, or inflation-adjusted terms, it would likely crash as mortgage rates blow past any affordable level, no one's able to get a new mortgage, which means the potential pool of buyers disappears and prices crash. Unemployment would spike as businesses face that collapsing demand because consumers are squeezed by inflation and the inability to refinance any debt, and so it's stagflation at best or a full depression at worst. And then of course, there's the contagion everywhere, all around the world. As if US Treasuries, the safest in the world, the safest asset, are tainted, every financial contract in the world referencing that risk-free rate would need repricing instantly. Businesses would go out of business. Literally millions would find themselves unemployed. If global contagion was bad in 2008, it would be 10 times worse this time around. So I think you get the picture. Everything that could be bad would be bad. There would really be no silver lining here. The American economy would be destroyed, as would basically every other economy around the world, and even BRICS nations like China or India or Russia would be devastated as well. In reality, a total US debt debasement of any substantial quantity, if they were to try and even get rid of half of the US national debt, the global economy would suffer just as much as the American economy would. So honestly, even in the short to medium term, over the next 10 years minimum, the chance of this happening is slim to none, right? Which is basically why the US Treasury is considered a risk-free investment. And it makes perfect sense why US officials keep saying, no, we're not doing that, obviously, whenever they're asked about these ideas or these accusations from Russia. The costs are just too high, and frankly, for only a, say, $10 or $20 trillion gain of wiping out, half of the national debt, it just wouldn't make sense for the US to pursue this policy. But that does lead us to a final question. Would the US ever contemplate something so extreme? And the answer is actually a little bit obvious. In short, because the debt burden is getting worse every day, there will one day come a point where it is completely untenable and the US can't even afford the debt service anymore. When that happens, suddenly the risk to reward ratio for this kind of crypto or global reset, it flips around, and suddenly the US is better off just writing off their debt and accepting all of the pain that would go alongside it. And on top of that, there is actually precedent for this happening in the past. And not with some backward African or South American country, but actually with the US and relatively recently. Firstly, in 1933, during the depths of the Great Depression, FDR took office and he immediately took the dollar off the gold standard domestically. He issued an executive outlawing private ownership of gold, forcing Americans to turn in their gold $4 to sell them to the government at a fixed rate of just above $20 per ounce. Then, a year later, the government revalued gold to $35 per ounce on paper, making the government a lot of money by stealing gold off citizens and paying them back with a price that would be thrown out just a year later. This also effectively devalued the dollar by about 40% in one fell swoop. The US wiped out 40% of the value of the real dollar-denominated debt as well, from government bonds to bank accounts, since those were previously backed by gold at the old rate. If you held a $1,000 government bond, its gold value just dropped by 40%, and that was in essence a default in disguise. The US didn't fail to pay its debts, but it kind of changed the definition of what it owed people so that it had to pay back less. And this was obviously hugely controversial and very damaging. So why did they do it? Well, to inflate away the debt and to try to get the economy moving again after it was in depression, incredibly similar to the circumstances we're creeping towards today. And we also saw something similar happen a little later on in 1971 as well, when Nixon removed the rest of the gold standard through the Bretton Woods Agreement when he got rid of that. Now, in short, the Bretton Woods Agreement meant the US dollar was on a partial gold standard, only really for foreign central banks. Foreign central banks could convert dollars to gold at still $35 per ounce, and by the end of the 60s, the US had just printed too many dollars because of their huge government spending from the war in Vietnam and other things. So other countries started using the Bretton Woods Agreement to exchange gold for dollars at that $35 per ounce rate, and they were booking a profit to the detriment of the US financial system. So in 1971, Nixon removed the Bretton Woods Agreement, and suddenly the dollar was a pure fiat currency. Those nations, those foreign nations holding stacks of dollars, they could no longer switch it for gold at a profit. They were stuck with paper that the US could devalue at will. And that's exactly what happened. Just 2 years later, by 1973, the dollar's value in terms of gold had plummeted to $135 per ounce compared to the $35 per ounce it was sitting at before. And the end result, the US saw massive inflation for well over a decade. In essence, again, the US paid off its debts in money that was worth dramatically less than it was when the debts were incurred. And that's another example of one of these stealth defaults. The holders of US debt in the 70s got much less back for their lending than they were originally expecting, and the US never formally defaulted on its debt. It just printed some money and devalued the debt. So for everyone saying that the US would never go this far, that they'd never devalue the dollar or treasuries, well, these precedents show that when cornered, the US has done this before and considered it to be a lesser of two evils to defaulting, to devalue and damage the dollar, even with all the harm it does, as opposed to pulling the purse strings tighter, reducing government spending or defaulting on its debt. The current situation isn't quite yet as bad as the Great Depression or 1971, but if we fast forward a decade or two with current trends, with the deficit growing every year, the debt ceiling always being raised, national debt could easily reach $100 trillion before long. With debt service eating into the budget, maybe even another war or a major financial crisis fueling money printing, and the tokenization of finance might be seen as the lesser of two evils again, an easy and disguised way to silently default on the national debt without having the same stigma run through the markets. And if they point to Nixon or FDR doing the same thing 50 or 100 years ago, well, it's actually fairly reasonable to think that the US government might be successful in pursuing a policy like this. And I don't think this kind of reset is coming anytime soon. I do still think we're a few years away at the very least, but we really do have to worry just a little bit about dollars being devalued in one big action to tokenize that American financial system. There are serious problems facing the economy right now. The AI bubble is monstrous and terrifying. The US economy actually would have shrunk last quarter if it weren't for the capital expenditure being put into AI data centers. And we're now watching private lenders collapse almost every day at this point, so this is certainly something we should be keeping an eye on. Now, if you want to hear about financial, economic, and geopolitical news before everyone else, or learn a little bit more about this silent debt default, then click the link down below in the description and you can sign up for my email newsletter for free. I don't have to record and edit these whole videos together for that newsletter, so I'm able to get content out to you far, far quicker, making sure that you're ahead of the rest of the crowd. The link to join is down below in the description for free. You can, of course, cancel or unsubscribe anytime, no questions asked. So click that link down below in the description to check out some of what my readers have to say and to sign up for free.